I'll be talking about the topping process. This is the scenario that we've already topped. I think it's less likely. I think it's more likely we're still going to go up and hit the upper channel line, which we failed to reach. I think we're still going to do it. This scenario would have us having 1, 2 after primary wave 4. Well, 1, 2, 3, 4, and then we got 5, and we've had a truncated fifth where we went slightly higher. It was a failed breakout, and that's it. It's over. That completes minor wave 5, intermediate wave 5, the 5-leg push higher, and that completes the whole thing is primary wave 5, and that completes the cycle top. That's the bearish scenario that we're done. It's over with. I mean, the RSI would have to stay in negative territory, and the MACD would have to move into negative territory. Now, if the MACD firms back up as it did surrounding the 2023 bottom, we buy more time. Firmed up at some of these other lows here during the run-up. So that's the bearish scenario. That's the bearish count. This count says we've topped. It's over. This count is going to be invalidated. I think we're going to go and get another big push higher. Now this count shows that, hey, intermediate wave wasn't over here and four over here, and this wasn't intermediate wave 5, but this whole thing is just an extended wave 3. You got wave 3, you got an AVC, and now you get intermediate wave 4, and it either finishes right here with our bottoming tail from the previous week, or we go a little bit lower. That bottoming tail, if it can be confirmed next week, you got a shot at a bottom. This count would say we get one more push higher for intermediate wave 5, that it didn't complete over here with these 5 minor waves, as I showed you on the other count, but that we have the intermediate wave 3 and 4 here, and we have this massive extended wave 3. And this is what I think is more likely, because this does look corrective. In the past tops, you've had these sell-offs, these drops of 10.5% and 12% in 2007, 10.5% in 2000 at the 2000 top, followed by new highs. And I don't think it's unreasonable to think we still go up to this upper channel line, the blue channel here, and end up tagging it. We now have a smaller channel as well. We had a rising wedge forming a rising wedge, and that red trend line right there broke. Could the rising wedge be evolving into this larger channel in a much larger channel going back to the 2022 low? I think that's very, very possible here. We'll be watching our bullish hammer. If it's confirmed, we'll be watching to see if we bounce off the 50 here. Again, we're closing right at it. If the RSI gets back above it, we'll reaffirm the 50-50 signal. And then again, everybody telling us this, there's no way we're going to rally. And when we rally, then they're going to tell us, well, it's a counter trend rally. And I think you're getting the final phase of the blow off top. That's what I think is going to happen. So this is what I think is more likely. I showed you that other count. That's a bearish count. This is the bullish count that we still go make a new high. We do have some similarities with the sell-off to what happened in 2000 and 2007 in the topping process. NASDAQ and S&P barely squeaked out a gain, breaking the 4-week losing streak. NASDAQ's at the 50-week simple moving average and the EMA. They're both right there. We're just below the trend line. Could we have broken this trend line to have a channel, and this is our linear scaling, could we have broken it to have a channel with our log scaling, a really nice looking channel? And I've talked about it again, like the trend line breaking over here, but then we went and made new lows, and we ended up forming a new trend line from that peak with this high right here, and eventually broke out. And trend lines change, they do. We slightly violate this and end up getting back above the 50-week moving average, go back and fill the gap, and the rally that we end up getting a rally, and everybody's telling us there's no way it's going to happen. The herd's telling us no way. Bears are telling us no way. Rally, and again, they told us the sell-off wasn't going to happen. There's no way it could, and now they're telling us there's no way it can rally. That's what the herd does. It could be violating this level and just slightly changing the trend line to a larger channel in with our log scaling. If you look at the log scaling with the NASDAQ, again, with that hammer, if you take that low and connect it back from this low, and then you draw a parallel boundary, you got a really nice looking channel. Now, I don't know if NASDAQ will end up diverging with the S&P 500. We may go to a new high and have the S&P make a new high, have NASDAQ make a new high, but then diverge at higher levels. I don't know. Possible count here that primary wave 4 finished back over here. And let me just bring that down so you can see primary wave 4 finished here. We got a primary wave 5, and you've got a 1, a 2, I'm sorry, a 1 and a 2 here, and then you've got this extended wave 3, 1, 2, 3, 4, and then 5, and then we've got this ABC for 4, and now we're going to get the final run-up. So again, is that possible? I think it's very possible if we bounce off the 50-week moving average, as we've done at the previous lows over here, the 50-week moving average and the EMA and the SMA. Could we reaffirm a new 50-50 signal, getting back above the 50 on the RSI, getting back above the 50 on the weekly chart here for the NASDAQ? We break the trend line with our linear scaling to form this channel with the log scaling. I think it's very possible. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Most channels on YouTube make money through sponsors. I choose not to do that. I just ask that you do what you can to help out, and rather than trying to sell you a bunch of stuff, I just ask that you follow the link below to a secured site and do what you can to help out. I need to hear from you in order to make that work. So if you take a moment to do that, I would really, really appreciate it. I thank you for your consideration for that. Look, I told you I was watching a couple weeks ago. I was watching to see if we go in negative territory. We went in negative territory, the trend direction. Last time we did that was in July, and it failed, and we ended up rallying up to new highs. We got another reference point of a divergence here. Could we get another and go back into positive territory? Because right now, volatility is not confirming it. We're not getting back above the signal line. We broke the downward trend, and we got above that, but we're not getting above the signal line. In order for volatility to return, you got to get above the signal line and remain above it, and then you got to stay in the negative region here with the trend direction, like we did over here in 2022. And here, again, volatility soared when we had the 2022 top, got above the signal line, stayed there, and we stayed in the negative region with the trend direction throughout the decline. If we're going to top, that's what needs to happen here. If we go back into the positive region and we turn off of the signal line right here, then again, it will just be another sell-off like what we had in January, or like what we had back with the April sell-off. It occurred, but then that was it. It was just a pullback, or back over here in 2023, the bigger one, early 2023 and late 2022. It's over. We're going to see volatility surge here and remain there as it did back over here and not be a corrective move. We're going to see direction remain negative and marking the trend as bearish. If we get back in positive territory, we get a rally back above the 200 and start moving to the 50, as I think we're going to. We still may get another push lower. You're eventually moving back to the 50 for a test. Then if we see this go positive, it will just mark this as a corrective move. So either the selling is about to come to a conclusion, or we're going to get a much bigger sell-off. And again, I believe that we're in a bottoming process. You have very negative sentiment, you have extreme fear, and that is usually a recipe for a bottom. Now, in my last update, I talked about the Elliott wave count. Again, I think you have two possibilities. Either you're going to get the blue count here, where you're going to get one more flush out to undercut this level. There's major support. I talked about that in the last video. Or, again, we bottomed with the bottoming tail in the weekly time frame, and we'll see confirmation of that possibly next week. Once we complete the bottoming process, I think the S&P will go higher. And again, it could happen quickly. It could happen over several months. Could happen over multiple weeks. But I want to talk to you about the Pring parameter. And again, look at this. Look at this. And again, we had this divergence. Okay, we got the lower high with the February peak, lower than the December peak, and it formed a divergence right here. And now it's coming to the center line right here. And it's what happened in the past in 2000 and 2007 is we saw the Pring parameter firm up and go back up and make a divergence after we had a 10.4% drop in 2000 and a 12% drop. So I think one of these scenarios is likely. Here we've already dropped 10.5%. If we drop a little bit more, maybe we get a 12%, closer to a 12% drop like we did in 2007. But I think you're going to see this end up firming up, and we'll end up moving back, preventing a bearish death cross as we did back in both of those scenarios in 2000 and 2007. And I think that, again, this looks corrective to me. And again, this is what happened before you got the blow off top completing. You had this huge amount of volatility. Everybody thought, oh, it's over, it's over. And then we went up and we had new highs, and everybody changed sentiment. And again, got back above, ended up getting back above the 50 here. Here's the 50, the green line. And it ended up changing sentiment, a spectacular rise. Then you topped out. And then it was followed by the 20% crash or so in both of those cases. 2007, it took a little bit longer. We had to set up a lower high, but it was followed by. But Pring Parameter, look at Pring Parameter back in 2000 and 2007. Look at this. It looks very similar to what we have right now with this sell-off right here, dropping below the 200. Notice that. That's what happened back then. If we get back above the 200 or get another flush out and then get back above the 200, again, we could be on our way back to the 50 for a test and probably stall there and then eventually get back above it to challenge this high. Again, that's what happened with the topping process previously. You had this huge amount of volatility, but it was a fake out, and then you rallied to new highs, and then you got the real crash after that, the real kickoff to the bear market, the 20% crash that I've talked about. I don't believe this is it. Now, we've dropped 10.5% so far. We might drop 12% if this wave is not done. But I think that it is very possible that we are in a bottoming process, and maybe we bottomed with the bottoming tail here 2 weeks ago. Maybe we get one more push down to undercut the low. Now, look at Pring Parameter one more time, and look at the diversions, and look how it's come down. This looks very similar as we're below the 200 period, very similar to what we had in 2000 and 2001. I think you're going to rally back up to that 50 period moving average, get back above the 200, either a push down to get back above it, or we attempt to do it with the higher low setting up. Maybe we pull back a little bit more for a higher low, but again, going to be watching to complete the bottoming process. The narrative right now and the conventional wisdom is that we're going to have the April 2nd tariffs, and we're going to see a massive crash in the stock market going into that or surrounding that. You know, this is just getting started. And if you look at history, I don't think so. I think that we're still in a larger topping process. That's why I think that this is wave 4. Maybe it's here with this 5th wave push right here. Maybe it's over here, but I've marked it here in black for completing over here, blue for completing over here. So again, I think you have a 3 with an ABC. Let's take a look at Pring Parameter. And I've shown you this before, but I think it's important. Let's take a look at Pring Parameter and what it looked like back at the 2000 top and the 2007 top. Now up here I have Pring Parameter, and now let me just zoom out here so you can see, again, we had this peak right here, very similar to what we recently had at the February top, but we ended up selling off 10.40%. We just sold off 10.5%, just over that, okay? But then we dropped below the 200, and we carved out a bottoming process, and we ended up getting above it and moving back to the 50, okay? And then testing the 200, back to the 50, testing the 200, and then clearing that, and we had this parabolic rise. And again, from this low right here, from February 28th at 1325, we rallied all the way up to 1553. So we rallied up over 200 points. We rallied up over 17% in less than a month. And we had this move just all the way up here and moving well beyond the previous high. I think you're going to see something like that. Now, again, this was about a month. The 2007 top was about 9.5 weeks. Maybe we see something like that. Maybe we go for several weeks. Maybe it doesn't happen this quick, but it could. At 17%. In 2007, we rose up by over 15% in 9.5 weeks. You're going to get, a 15 to 20% move, and I think it's going to be more like 17 to 20%. It might be more if we get another push down, because I'm still looking at my trend lines as the level to go to. But look at the Pring Parameter, and look at this carefully. Look, you're seeing it turn down. We're below the 200 period, exactly what we did right here. And here we got back above the 200, rallied to the 50, and it began to firm up. And then when we cleared the 50, you get the bullish cross there, and it began to turn back up, and it formed this larger divergence after the peak there, ended up rolling over. But it did diverge. It was just after we had sold off, then it completed, which is likely what you're going to see happen again. So again, I think you're going to see something like this, where you go back above the 200, go back to the 50, and eventually attempt to clear it and go above these highs over here and move in a breathtaking rally. And my guess is back up to the upper channel line, and I think you'll complete this divergence on Pring parameter. This is the 2000 top. After that, we had a big sell-off of nearly 14% 3 weeks later, and then we had a lot of chop until we had a lower high set up in September, on September 1st, and then you got your 20% crash, and that's where the Fed panicked down over here, where we dropped 19.5%. So again, and again, we had the sell-off, we had the final exit point as we got the death cross, and so I think you're going to have the death cross being prevented from happening here as we see Pring parameter firm up, and then we turn back above the 200 and go back towards the 50. Everyone's going to say it's a lower high, it's a lower high, and then we're going to get this, and they're all going to drop their jaws in disbelief. The people that are telling us, and again, I keep pointing out, the people that are telling us right now there's no way we're going to go up are the same people that told us at the peak there's no way it's going down. Okay? At the December top, the January top, and the February top, these are the same people. The herd, they get extremely bullish at tops, they get extremely bearish at bottoms. So I think you're going to get back above that 200 period, and I think you're going to come back and test these highs. It wasn't over with this 10.5% sell-off. I think the Pring parameter looks very similar to what we have right now. It's dropping, it rolled over, it's dropping, it's moving towards the center line as we're below the 200 period moving average. Here we had the diversions currently that caused it to roll over, and here it's coming to the center line as the S&P is below the 200 period moving average. And I have this close up here, but you can see, again, I think we get back above that 200 period, and I think we move to the 50 for a test, and then I eventually think we try to clear this area. But this is what has happened in the past. So again, Pring parameter looks very similar, below the 200 period moving average as it did over here in 2000, Pring parameter moving back to the center line. And again, notice the divergence that ended up forming, and the S&P went to new highs. 2007. I'll bring this up really close so you can see it. And again, these previous tops, again, could be the roadmap to where we're going. Now, again, we went over 17% with the other peak. Here we went over 15% after we dropped 12%, and the 12% was the bottom. That's what I'm saying. We still might drop a little bit more if the wave count isn't done, but it could be done with our bottoming tail from 2 weeks ago. But here at the 2007 top, here we have the drop below the 200 period moving average, got back above it, had some volatility surrounding it, hit that 50 just like we did in 2000, came back, got a little bit more volatility surrounding the 200 period, then you got above it. And then you went back again to the trend line up here, the trend line really right there, to be exact, and we ended up rising in about 9.5 weeks or so. We ended up rising about 15%, just over 15%, 15.12. I have it marked right here. So after dropping 12, we rose back up. So I think you're going to go up 15 to 20%. And if we go up 20% from our recent low, you're going to be slamming right into my trend line of resistance in the weekly time frame. But look at what happened with Pring parameter. Got a divergence, just like what we had right here. You sold off 12%. You came down to the center line. You began to bottom out with the bottoming tail. You got back above that 200. And again, Pring parameter turned back up, and it ended up diverging at that peak. And again, the peak, we rolled over, and then it ended up rolling over, marking that as a diversion. So here, even closer with this first divergence and possibly another reference point of a divergence, very similar to what we could be forming right now. Then we sold off about 11% in a few weeks, over several weeks here, and then we rallied back up, had the final exit point again just before the death cross. Came down here, dropped over 20%. The Fed panicked. We got the emergency cut. We got a little bit of a bounce. got more, and again, I can go on and show you that again, the rebound, the bigger rebound, and then the drop. Let's just do that again. The bigger rebound. Here's where the Fed panicked. We rallied up, and then we pulled back, and then we got the bigger rally to the 200 period. And again, at that point, we moved sharply lower, attempted another rebound, and then we eventually got the Lehman moment. And again, financial crisis and the whole thing. But again, this is what I think is setting up right here. And if I just zoom out and show you the whole thing, the whole bear market from 2007 to 2009, look at Pring parameter, negative diversions. First negative diversions, the 12% drop. Okay, rally back up, 15% higher. Again, to form another reference point of a divergence, it eventually rolled over, price rolled over, and it eventually took Pring parameter in negative territory, and look what happened. You ended up, again, dropping below the 200. You got the final exit point. You got the death cross, and look at what happened. Parameter stayed negative until it formed a bullish divergence, and it marked the bottom. Look at that. Marking the bottom, marking the top. So, again, I think you've got a topping process. And I think that this is the volatility right before the final climax high, the final phase of the blow off top. We push higher, but then I think we get this following. So again, I think we're in a large topping process. And if we see a rally back above the 200 and then get back above the 50, we're probably going to follow this roadmap here from 2007 and 2001. I've talked about in the weekly time frame how, again, we came back, and here's the weekly chart of the 2000 top. We came back, we dropped 10.5%. We came back to the cloud, we came back to the 50, and we dropped below it. And then we got back above it and had that rally of over 17%. And we ended up seeing the RSI dropped below the 50 level, but then it got back above it, and you ended up getting another reference point after multiple points. And look at all the reference points of diversions here, and you still got another one, and you bounced off the cloud, you bounced off the 50, and you went back up here, and you ended up getting that higher high, eventually had the more volatility, as I said, and tested it. And September 1st, you got that lower high, and then you got your 20% drop, and the Fed panicked over here in January of 2001, and we got a little bit of a bounce here. So right here, January right there, we got a little bit of a bounce, and just a counter trend. But again, the RSI went into the negative region, dropped below 50, it remained there for the duration of the bear market. The pull-ups to the 50 were the counter trend rallies towards the 50 period, the week moving average. A 50-50 sell signal was triggered. You drop below the 50 here, and you drop below the 50 here, and you couldn't get back above the 50. Couldn't get back above the 50 here. Now, here, the pull-ups to the 50 marked the top or just slightly overthrowing it and pull up towards that 50 level on the RSI. Here, the sell-offs caused the price to dip just below the 50, and then we got back above it. So we're here right with the 10.5% sell-off. We dipped below it, but we ended up getting back above it and got another reference point of a divergence. I think you're probably going to see the same thing. But the 50-50 signal is you're going to drop below the 50, which we've now done, and you can't get back above it. And the RSI is not going to be able to get back above the 50 level. That's the 50-50 signal. Below the 50-week moving average, and you drop below the 50 level on the RSI. And then you stay there, and you stay there below the 50. And then this happens as this happens. You stay below the 50, and the rallies up to the 50 are usually up to the 50 level on the RSI. So again, right now, the 2000 top and that 50-50 signal, and then the 50 eventually rolled over and started curling down. But you had the test of the 50 and everything. And again, right now, we have something similar to right here, what we had. And we had a couple of tests of the 50, actually. I think that we have a topping process. This is the first time we've lost the 50 on our current price action since the 2023 low. So we've had this spectacular rally. We've now pulled back to the 50-week moving average. We've taken it out, and right now we broke the losing streak, the 4-week losing streak, just barely, and we're right at that 50. So we got major support directly below if we go a little bit lower. But do we see the RSI end up turning back up like it did and end up getting another reference point of a divergence. I think that's very likely, and coming back up and hitting my upper channel line here. And if we rally back up, we're being told there's no possible way we're going to rally right now. That's what we're being told. I mean, if you go on social media, we're going to get the tariffs and that's it. It's over. The sentiment is so bearish right now, and it's so bearish it's bullish. But we're going to likely rally up to the broken trend line, back up to the broken trend line here with our log scaling, and then again a Fibonacci retracement. And that's where the 50-period moving average is in the daily time frame. And then I think you're going to turn down off of it, and then I think you're going to try to break up and hit this upper channel line. And this is where I think we're going. And if we bottom out right here and you rally back up to this area, you could be rallying up 20%, as I've said, which would be similar. And this has been a very, very powerful bull market. AI and everything. 2000, we rallied up 17% less than a month. In 2007, we rallied up over 15% in 9.5 weeks. I don't think it's out of touch with reality to assume that we're going to go back up and hit this trend line, and that's going to take us up probably about 20%. If we go a little bit lower, then maybe a little bit more than 20%. And I think it's going to be followed to kick off the bear market. The overall topping process, it'll kick off. We'll get a 20% drop. That's what's happened in the past, and start moving back to this trend line. I don't think this is it. I think this is corrective, and I think we'll get this final push, and then you're going to push back towards this trend line. You get a 20% drop. The Fed will panic. You'll get the emergency cuts. The market will go, it's over, it's over, it's over. We're going to rally back up, and it's not going to be over. And then the bottom is going to fall out of the stock market because it's going to begin to price in the recession. That's what I think is going to happen. But we are at the 50. The cloud is below, but the 50 is right here. We moved to just above the cloud. 2007, we moved just beyond the 50. We ended up getting a bottoming tail and then pushed back above it. Still ended up rallying to new highs. I have the stage 1, the stage 2 markup, the stage 3 here, the stage 4 decline, the 4 stages of the market cycle. Notice after the bottom here, the RSI got back above 50, and the pullbacks to the 50 level over and over, and were the pullbacks to the 50. And then we turned back up, and you reaffirmed the bullish 50-50 signal. You got below the 50 and went to the cloud, and then you bounced. And each time you bounced and you got back above that 50 on the RSI, and it ended up marking a brand new bullish 50-50 signal, getting back above the 50, getting back above the 50 on the RSI over and over again. Look at that. I've marked it with the arrows there. And then again, here we got the test of the 50, got back above it. We ended up getting back above it, and you got one more divergence. And again, you ended up having this nice looking channel right here at the 2007 top. And then that divergence ended up again giving us the reversal and getting the 50-50 sell signal, as I've talked about. But again, I think we're right here where we're getting this either 10.5%. Maybe we go a little bit lower and get another push down. But I think you're going to bottom out, and then I think you're going to get this run up, and nobody thinks that's going to happen right now. They told us there's no way we were going down. Now they're telling us there's no way we're going up. So it's likely we are going to try to bottom out and go to a new high and complete a topping process. I wanted to show you these weekly charts, because here we had a divergence that marked this peak, and we still ended up getting another one. We had those multiple divergences in 2000. So I think you're going to see something very similar to this. That's why I think the RSI will end up pushing back above 50. I think we're going to bounce here at the 50 level, and again, we're closing right at it here. And I think you're going to get this attempted rebound. People that are telling us there's no possible way that's going to happen when we get the rally, then they're going to tell us, the bears are telling us there's no way we're going to rally. And when we bottom out and we rally, the bears are going to say, oh, we're going to get a lower high. Retracement. But the bears right now, they're telling us there's no possible way we're going to rally. And the herd is very bearish, believes the stock market's about to fall off a cliff. We got the tariffs coming on, and it's over. That's it. And that's not the way it's going to work. We're going to see negotiations. We're going to, see something happen to give the market hope, as I talked about in my last video. I think rather than rallying back up and back testing and getting a lower high and a Fibonacci retracement, I think that we still have the topping process under construction, and I still think we're going up to this upper channel line. And let me just show you the daily chart. Here I've done this layover with the 2000 top. The 2000 top here is in blue. In black, the black line is our current price action. And again, not going to follow the same price action exactly, but it's similar in that we had this sell-off. We had this sell-off over here with the blue in 2000 that gave us nearly a 10%, 10.5% drop. We had it here in a few weeks over February and March into getting a close to that, just over that, a 10.5% drop. Maybe we get a 12% drop. Maybe it's a little bit closer to what we had, and we come back, down into this area, and it's a little bit closer to the 12% sell-off we had in 2007 if we haven't bottomed yet. But you got a shot that we're in a bottoming process, either, or I should say more than a shot. That's what I think's happening. Either the bottom being in or one more push down. But look at the breathtaking rise. And again, it went and it exceeded the blue over here, and it moved to new highs, and we ended up rallying over 17% in less than a month. But if we remove the layover from 2000 and we just look at the current price action, again, I think we're going to end up getting back above the 200 or get another push lower and then get back above it, move towards the 50. And if we get a Fibonacci retracement, again, you're moving towards the 50, you're moving into the golden pocket right here, and everybody's likely going to say, oh, it's over, it's over. People are telling us right now that there's no way we're going to rally. When we do rally back up here or get a push lower and rally again, then they're going to tell us it's a back test, it's a lower high setting up, and we'll probably end up moving up to the 50 and end up stalling at it and then jumping above it. But this is a very similar situation to what we had at the 2000 top and at the 2007 top. And then, if we go 17% higher like we did in 2000, you're looking at, again, coming up here to above 6,400. Here a peak was 61.47. If we get a 20% rise and go back and hit the trend line, maybe going into May or something, possibly going on into the summer a little bit. If we go into June or July, then again, we're looking at coming back up here. But here's 17% right here. Here's 20% right here. And this is the 17%, just overthrowing 17% from this low right here. So we've dropped 10.5%. If we were to rally up 17% as we did in 2000, you would be back at the mid 6,400 area. Okay, you would be back at new highs, and you would be at 6450 area. And if we get above that and we go up to this trend line, then again, you're going to move above 6,500 or move towards 60, maybe on into 66. That's why I'm saying we could have a move that could take us to 65. And if we take our time doing it, maybe 6,700, 66, 6,700 if we take our time. But if we go a couple months, you can be at 6,600 by May, possibly June. And if we take our time reaching the trend line, if we do, you might go a little higher than 20%. But this area right here, 17, 20%, that's where I think we're likely going to see. That's what's happened in the past. I think this is corrective rather than starting, the crash to kick off the bear market. I think it is corrective. But this is what I think is likely going to be the case. Can bounce off the 50 week moving average, get back above the 200 here, and really try to go back and test the 50 and eventually get back above it. I don't think that this is unrealistic at all, because it's what has happened. Again, even if we go to 1700, you're looking at that 6450 area should this low hold. Okay? Or if we go a little bit lower, then again, possibly a bigger rally if we go to that trend line still, or even if we went a little bit lower, again, a 17 to 20% high would still take us to new highs. That's the point.